Hello traders, Gary Wagner here. 12:25 in Honolulu, 5:25 in New York on Tuesday, 13th day of February 2024, and this is the evening report for gold and silver. Today's CPI report came in slightly above the expectations by just 0.1%. However, that caused market participants to dramatically shift the sentiment in regards to when the Federal Reserve will implement its first rate cut. That led to yields going up in U.S. Treasuries, the dollar moving substantially higher, and the combination of that plus market participants having bearish sentiment in regards to gold took gold down by double digits today, a total of $25.80, settling in New York at $2,007.20. Gold is now trading overseas. You can see that it is down $2.20 from that price point, currently sitting at $2,005. Gold declined by about 1.27%, and when we look at the dollar in terms of the gain today, it was a gain of 0.77%. So roughly half of the decline in gold today can be directly attributed to the dollar, with the remaining half to bearish market sentiment, with traders bidding the precious yellow metal lower. The dollar traded to a low today of 103.365, a high of 104.855, and settled very near the high at 104.85. Silver, in terms of a percentage decline, was almost double that of gold. Silver gave up 2.69%, or 61.5 cents, settling in New York at $22.15. It is trading overseas now, down 1 cent from there at $22.14.5. What is critical is that it did break below a key support level. That was the 78.6% fib retracement, which comes in at $22.39. Traders, I believe that this was an exaggerated downside move based upon inflation numbers that came in just a little different than expectations by analysts. However, it did take gold through a key psychological level, $2,000 per ounce, with gold currently trading at 1991.96. That is extremely close to the 100-day moving average, and my belief is that if this was truly an exaggerated move or an overreaction to today's CPI numbers coming in just 1/10 different from what was expected, this could be a one and done. If that's the case, I would expect gold to move back above $2,000 per ounce and have that price point return as a level of support rather than resistance if gold continues to break lower. It is resting at the 100-day moving average. That is a substantial number that we want to look at. Below that is a 50% retracement that comes in at 1979.52. It is based upon the data set from October's low, which comes in just above $1,800 per ounce, to the absolute high when gold reached above $2,100 per ounce. Although the 50% retracement is not a Fibonacci number, I believe it's very important in this case because when we look at how gold is traded and where it was trading approximately the second week of December, you can see these series of lows that match precisely with that price point at approximately $1,980. In other words, if we do see a further decline, I would expect to see support come in at $1,980. Silver also broke through a critical area, the 78.6% Fib retracement at $22.39. However, in the case of silver, I am more bearish than I am in gold. I draw your attention to our moving averages, the 200-day, the 50-day in green, and the 100-day in blue, and it does appear as though the 50-day is crossing under the 100-day, and if that happened, we would be in full bearish alignment. If silver does find support in this area, I'm going to base it upon the fact that back in January 22nd, we hit a low that is very similar to the low that was hit today, and I would look for potential support at $22 per ounce. If it breaks below that, it could trade as low as $21.50. But again, we could be witnessing an exaggerated move based upon today's CPI report coming in slightly different than expectations by economists. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.